With massive layoffs in nearly every sector, weakness in manufacturing, car sales, and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on Stansberry Research. Well, I can definitely say my interview today has been over 2 years in the making, so I'm very excited to finally have on Mike Maloney. He's back with a brand new book called The Great Gold and Silver Rush of the 21st Century. Mike, it's been a long time coming for this to finally happen. Welcome to my show.
Well, thank you. It's a pleasure to be here. While I was writing the book, I've been turning down all interviews for about the past 3 years. So that's the reason we haven't done this yet, is I couldn't do both those things and get this book done.
I should say, I definitely wasn't taking it personally. I knew you were writing this book, and I told them I need to have the first interview when it comes out, and we're going to talk about various topics your book covers, because I read it, I crammed it all in with great interest, and I actually want to go back and reread it when I have more time. But you wrote your first book in 2008, correct?
It came out in 2008. I started researching for that book in about 2002, and I think I came up with the table of contents for it in 2003. It was written in 2005, 6, and 7, and then the writing and editing, and then came out in 2008. People do not realize how much work a book is. It is.
Well, this is a labor of love. I mean, how many years have you been working on this book?
I actually started it a decade ago, and
wow.
I worked on it off and on, then became very serious and started working on it much more intensely in 2018 and 19. In 2020, when the COVID crash happened, the pandemic plunge, I thought it was all over with, that was the popping of the bubble, that I had missed it and that I had wasted a couple of years of my life. And so I didn't write the rest, once that crash happened, for the rest of 2020, I didn't write it. So I picked it back up 2021, 2022. I worked very intensely on it, trying to get it out before a potential crash, the market correcting from the warping and distorting of the economy that the Federal Reserve has done. Then we ran into the problem supply chain issues. The printer couldn't get paper, and then the printer couldn't get cardboard to put if he did print the books, he wouldn't be able to have boxes to put them in. And so I was trying to rush the printer, and then the printer says, okay, we've got it, send me your files. And I was rushing to try and get this done, and when we transferred the files from Word documents into the typesetting, it turned out that the book was big, and I slashed probably this is probably about 20% of what was written. So for every page that exists here, there were 4 or 5 other pages that also existed in the original drafts.
Well, there's a lot of great and a ton of research, and you could tell, that went into this book. So I'm going to try and hit on as many points as I can. We obviously want to talk inflation, doppelganger dollars, as you call it, an economy on life support, and of course, gold supply. So want to actually start with that, since a topic we track here closely is central bank buying of gold. We're seeing record amounts of it happening. China's gold imports in 2022 hitting the highest level since 2018. So we know central banks are hungry for gold. But on top of this, you add to it, where have all the miners gone? And I just want to read something from your book here. You say the Bureau of Labor Statistics predicts that by 2024, a third of mining and geological engineers will likely retire. Imagine if the tech industry lost third of its programmers, or a third of the oil industry's engineers called to quit. Both sectors would be devastated. This is precisely what is happening to the mining sector. So, global scope here, Mike. Talk to us about what you're seeing in terms of gold supply.
Okay, I have to be honest here. Jeff Clark from thegoldadvisor.com is one of my advisors and a close friend. And he really helped me out with that particular section when it was on mining and the supply. A lot of that came from Jeff. But it is interesting, this convergence of all of these factors that the geologists and the mining geologists, all of the people that work in mines, hard rock mining is not being taught anymore. These guys are old, they want to retire, and there's very few schools, and I can't remember what it is, but the percentage of degrees in engineering degrees, the mining sector makes up this tiny fraction of it. Everybody wants to go into tech. Everybody wants to go into something charming. They don't. I think it was Jeff that wrote, "Dirt, forget about it."
Well, Jeff's a good friend of the show as well. But I think the bigger, the message of the book is, like, you compare the gold rush is of the past to those of the 21st century, and you say versus 1980 today, we also have 18 times more people around the world that can buy precious metals, 50 times more currency, 56 times more billionaires, 200 times more billionaires, and you go on and on. So obviously making the case that, the appetite, but is the conviction there? Are people turning to gold, do you feel? Is the knowledge there?
Well, there's twice as much gold available above ground, but it really doesn't matter if there's enough people turning toward it yet, because there's basically 25 times, the population is larger. The people that can access gold is, you could not buy gold in the USSR or Mao's China during the last great gold rush of the bull market of the 70s, which, by the way, with the exception of cryptocurrencies, was the largest bull market there had ever been. People don't realize how big the 70s bull market in precious metals was. By the way, when I say that gold went up 25 times and silver went up 41 times, I'm taking the intraday highs and lows, so that is the maximum potential gains. But still, that is absolutely enormous. And until cryptocurrencies came along, that was the greatest bull market of all time. Now, cryptocurrencies, some of them will do well, maybe all of them in what's coming, but there has just been a lot of suspicion cast on them with the FTX scandal and other things that have happened in that sector. I do own some cryptocurrencies, but the vast majority of the largest portion of my net worth that's in a single area is physical gold and silver. If they went up 25 times for gold and 41 times for silver back in the 70s, and then you look at the amount of gold per person, the amount of gold that's available above ground is about twice as many ounces as back then, except when you add up, there were no exchanges in Africa. South America was very poor. I remember when I was a kid, all of these commercials on TV trying to raise cash for these starving children. And so they would show starving children in Mexico, in places that are now not starving, where there are investors. There weren't any investors then. They were worried about what to get to eat tomorrow, not what to invest in. And so there's 18 times more people around the world that can access precious metals, with 55 times more currency, according to the OECD. And so, I had a crew of a researcher that would help me find all of the websites to get the data from, and then a chart maker, spreadsheet master, and then a writer, editor, proofreader. And so it was a crew of 4 people working on this. I have more than 3,000 hours of my time invested in this book. And if you look at the back, if you look at the end notes, this is very well researched and documented. Everything is referenced, and most of it comes from the Federal Reserve and the Bank of England. But there is something big coming, and people like Warren Buffett, for instance, he's not going to turn to Bitcoin. Even though he said gold is a pet rock, when the people that have the most capital, the people that are in their 60s, 70s, 80s, and 90s, when they turn to a safe haven, it's probably not going to be cryptocurrencies.
Well, let's go there because you brought him up. I was just watching something with his partner, Charlie Munger, earlier today where, they don't hide their disdain for the cryptocurrencies. As you say, in this talk, he called it crypto crap. But the line from his talk today that I want to bring up with you, which for me was more interesting than his, hate on crypto, is when he said nothing has done more good to the human race than national currencies. So he was talking and saying, people who want to replace national currencies with things like cryptocurrencies, he thinks this is absolutely idiotic, and it's almost like us wanting to replace our national air. So a true believer, he thinks that, national currencies are the greatest thing ever. And I was wondering, what's Mike Maloney's thoughts and response to that?
Well, you have to look at the way they're designed. When we used gold as money, and one of the things, the first chapter of the book is, the book covers a lot of things. The first thing is gold is real money versus national fiat currencies. There's no nation on the earth that uses money today. And people need to start differentiating between money, because money makes, currency takes. Money is something that propels mankind forward. It's honest. It's fair. Currency is dishonest. It's fraud and it's theft. And when you look at the way currency is created, when we used money, when we used gold, the amount of time and effort that it took to go out and prospect, find a claim, develop that into a mine the ore, refine the ore, melt it down, pour it into a bar, melt those bars and mint them into a coin, that amount of effort equaled the amount of effort that you had to work for in whatever you did to accumulate the right amount of coins of real money to be able to buy a house. And so this work was equal to the work that you had to put in, which is equal to the work that it took to cut down all of the trees, dig up all the dirt to make the copper plumbing and the cement and things, and build that house. It was a fair trade of something for something. When you use fiat currency, it's conjured into existence by a bank. When you're buying a house, you take a piece of collateral. You find a home that you want to buy. This is my collateral. I want to borrow $1 million. The bank looks at your financial record and determines whether or not you're a good risk if you can pay this loan back. And when they say yes, they imagine $1 million worth of bank credit currency, which is reminders that it's not actual dollars in your account, at least according to the Bank of England. It's reminders that they owe you a certain number of IOUs. But national currencies steal part of your future lifetime. This is my big point. It's a tool for enslavement. Just to have them around requires your future work hours to pay on the assets that were acquired to create these IOUs. There's in chapter 4, it does explain that the entire currency system comes down to it's nothing but IOUs. And what is it that they owe us? They owe us part of our own future lifetimes. We have been monetized. It's an IOU YOU. IOUU.
On that, to that point, I want to bring up a section in your book, There's No Place Like Home, where you say in the US, before the creation of our central bank, an average home cost a few $1,000s. You question, did the home go up or did the currency go down? But here's the part I really enjoyed. Before the Fed, the US dollar was worth 1/20th of an ounce of gold. Now, I can't tell you what the exact price of gold is as I'm writing this, but if you take the current price of an ounce of gold and put 1 in front of it, you will have the fraction of an ounce of gold that the dollar is worth as you are reading this. Yes, you say, the US dollar is only worth 1, insert the current price of gold, of an ounce of gold.
Yeah. And that's the free market exchange rate. That is what they've done to the dollar. They've stolen more than 97% of the purchasing power of the dollar. And we are about to see gold make up for, I mean, it's lagging right now as far as it accounting for the expansion of the currency supply. And that is about to change, I think, over the next 3 years or so. You're going to see some dramatic shifts.
So that's what I want to talk about now. Why the dramatic shifts? When you say that, something big is going to unfold or a crisis is coming, I want to understand what that looks like for you. What are you preparing for?
Well, there's two things that are going to trigger this. I mean, the creation of currency during the pandemic, they increased the M2 currency supply by roughly 40%. Then they decide, oh, there's inflation, and they're like surprised. They wonder where that came from. And so to try and get a hold of inflation, they're going to raise interest rates and make them positive, but they're raising them at the fastest rate in history. There's never been anything like this. When you're coming off of such a low interest rate of 0.25%, half a point is a half a point increase on 0.25% is a 200% increase. And so, you go on the Fed's website and you can generate charts and you go year over year percentage change, and it's like 8,000% increase. It's just totally insane, since they started the rate hikes. That has never been done before, and it will end up breaking something sometime or another. When the 2008 global financial crisis happened, Alan Greenspan didn't see that, when he lowered interest rates to 1% after the NASDAQ crashed, he was trying to reflate the stock markets, and he didn't even see the real estate bubble that he had accidentally created, in his peripheral vision here. That was like a side effect of those low interest rates, that and the development of mortgage-backed securities. So there wasn't enough watching. I don't like overregulation, but they need to watch for conflicts of interest. And there were a lot of conflicts of interest going on in the banking sector then. And the repeal of Glass-Steagall and Alan Greenspan lowering the rates and not seeing the bubble that he was creating, that all caused the global financial crisis. Well, look at what we're doing this time. We've never raised rates at this type of pace before. And the currency that has just been created just before we started raising rates is astronomical. And then you look at, the national debt rolls over every 5 years roughly. It's a little bit longer than 5 years now, but if you take the average duration of all the different bills, notes, and bonds, and it's $31 trillion worth of debt that we're rolling over, and we have to do basically a mortgage refinancing, a refi on the entire United States of America. We're refinancing the United States of America every 5 years roughly. And so we're only we're less than a year into these higher interest rates. So it's really not taking its big bite out of the budget. But calculate, what are we at, 4.6% interest now on the Fed funds rate? So take a calculator and find out what 4.6% interest is on $31 trillion. It's a pretty hefty chunk.
Right.
And after 5 years, all of this goes to the higher interest rates. It's a death trap is what it is.
I mean, there's so many points to cover here. I
Yes.
mean, you're basically talking your doppelganger dollars. I love that term you call it. You say the Fed has created 2.7 trillion brand new evil twin, is what you call it, doppelganger dollars. A type of dollar that never existed before, a dollar that will haunt us for years to come. So basically,
Yeah.
at the culprit of the inflation we find ourselves in, and you have a great video. I think it's Inflation Explained in Less Than 40 Seconds, where you say inflation is about basically the death of the currency going down, not prices going up.
Exactly. As they dilute there's only so many goods and services in a society that are for sale at any time. Things that you can pay people for and buy, and then you've got the currency supply that facilitates the transfer of true wealth, the stuff that exists in society, from one person to another over time and space. And if you inflate the currency supply, if you double the currency supply, but you haven't doubled the number of goods and services that are available to buy with that currency supply, it's just like making each unit of currency, you're diluting the currency supply. Each unit of currency has less purchasing power. It will store less. There's twice as many units of currency chasing after the same amount of goods and services. And this makes it a nightmare for businesses to keep up with all, it makes it a nightmare for people to try and get by. They suddenly find all these things being priced out of their grasp.
Exactly.
They need to ask for a raise. You ask for a raise, now the business isn't profitable. And on top of the raises, it's got to give its employees all of the prices of the supplies, the rent that the business is paying, and if it's a restaurant, for instance, all of the food that it's buying, those things are going up. So it has to change its prices, which makes it more expensive for the average people like the employees that now need another raise. And it's this never-ending cycle. And if we used real money, this is the thing that I started with my first book, was differentiating between money and fiat national currencies, because the national currencies are not money. And people need to start differentiating these two things, calling them by their proper names. Money cannot store value currency cannot store value. Money does store value. I've got a silver Pegasus coin on my desk that was minted in roughly 500 BC. And if you melt it down, it still has purchasing power. The silver in it, the content, still has roughly the same purchasing power as it would have had back then. They bounce up and down in a range, but precious metals are the only thing that have proven themselves over the centuries to be money, a store of value. If you go to the Federal Reserve's website or any other place and you look up the definitions of money, what are the attributes that money has to have? And even the Federal Reserve, the very first thing they say is it must be a store of value. And then they go on with the other things, a medium of exchange, a unit of account, and so forth. So a store of value is the most important thing. So if somebody thinks that their currency, their national fiat currency, the US dollar, the euro, the yen, the pound, whatever, if they think it's money and they tell you, no, our currency is money, then ask them, does money need to be a store of value? Is that one of its functions? And they will say yes. Then ask them, is there inflation? If they say yes, then ask them, aren't those two things mutually exclusive? If it's storing value, how come prices are going up and it's buying less the next day, the next year? The way currency is borrowed into existence, national fiat currencies, they have to lose value. It is not possible for them to maintain their purchasing power over long periods of time. And it's just a function of the math behind borrowing currency into existence and promising to pay it back plus interest. And the currency to pay the interest doesn't exist yet. You have to borrow that in the future.
So I usually save, what should we be doing for the last part of the interview, but I feel that I need to ask it now. Because, if we can't change what central banks are going to do next, if we don't obviously have control over that, over the system, what I'm hearing from you is like, what can we do for ourselves? Are you suggesting to own the bulk of your wealth in precious metals?
Well, that's what I do. I know that the world's central banks have been net buyers of precious metals of gold for quite a while now, and last year was a record that goes back to what 1968, I believe, was the
Right.
last time.
All
And
time. Actually, they adjusted
all
it.
time.
They came back. The World Gold Council came back and said it was actually the highest bought ever on record.
Doesn't that say to you that the central banks
Yes,
that are doing the purchasing know that something is up and they're getting
that's
ready
what
for
I've been
something big?
saying.
Right.
Yes,
Yeah.
exactly.
So, yeah, something big is coming. I'm getting ready for it. And the thing is, I wish I could have come up with a different title other than Great Gold and Silver Rush of the 21st Century. But I believe this is going to be the biggest gold rush in history. The amount of currency that has been created, the amount of true wealth that exists, and then all of that suddenly trying to seek a safe haven during periods of turbulence, which we are going into right now. And gold and silver have been suppressed, and some of the people that suppressed, there's been convictions of people that were accused of manipulating the price of gold. Now, these are more short-term manipulations, but long-term manipulations have existed as well. But in one chapter, to those people, I say that the manipulations have allowed me to accumulate gold at a lower price than it would have been if the free market was setting the price. And I say, thank you, thank you, thank you, thank you. Enjoy your time in jail.
Let me ask you. Let me go out on a limb and ask this question: if the central banks are desperate to hoard gold or whatever for whatever they see coming,
Yeah.
and you bring up that gold is, right now we can argue should be much higher than what it is, and you bring up, price suppression. Can we make a link there? I mean, don't central banks want to keep gold prices lower if they're buying?
Yes, they do want to keep prices lower. What was interesting, there's one little piece. During the pandemic, there were huge amounts of gold flowing into the United States. Normally, the United States is an exporter of gold, not an importer. And the COMEX was getting prepared they didn't want to face some sort of default. And if you look at that period of time, if you take the central bank purchases from China plus the Shanghai Gold Exchange, and you look at the inflows and outflows, China was accumulating, there were inflows. When you look at their exchanges and the central bank purchases, they only report once in a while. And I think they're actually accumulating more than they're admitting. But the China's constant importation of gold stopped, as well did the rest of the world. And it was like suddenly all the gold was flowing to the United States to prevent some sort of default. And so it seems like there is something very big going on beneath the surface here.
You talk about an economy on life support. You say
Okay.
since '08, the financial markets have been on artificial life support, and now the Fed thinks they can just pull the plug without the patient dying. I've seen in under other interviews you bring up, former Fed Chair Ben Bernanke, and you say it's like a joke. He won the Nobel Peace Prize, but yet you I don't want to use the word blame, but I will. You blame him for basically the collapse of the world economy. Do you
Yes.
really feel that the mess we're in today is due to Ben Bernanke, or do you feel it started before Bernanke?
Well, it started with the invention of this monetary system by Paul Warburg when they came up with the central bank for the United States, but that was based on a model of the Bank of England. So this goes way back. That was the beginning of the problems that we've got, borrowing currency into existence by enslaving future generations. When the Federal Reserve buys a bill, note, or bond, they're buying cash flow from your future taxes. So it's your future work hours that is backing the currency. Let me see, what was the question again?
No, basically, I was saying, like, do you really feel that the situation we're in today can
Yeah.
Ben Bernanke be blamed
yes.
1,000% for it, or
If you go
was
back to, well, it's the central banking, the way currency is borrowed into existence. But if you go back to Ben Bernanke's 2002 speech, just do an internet search for deflation, making sure it doesn't happen here, and read that speech. Or better yet, I gave a live presentation decoding this speech, I think back in 2015 or 2016, because he uses this central bank language that has a lot of big words in it that are supposed to go over people's heads, so they go, wow, that guy's really smart, we better let him run things. That speech laid out the roadmap for everything that has happened since 2008. It was all there, written and available for anybody in 2002. That is what caused me to, that's what caused me to write my first book, Guide to Investing in Gold and Silver, but to research the economy so intensely. And it's a shame that this is titled Gold and Silver, because people, the majority of the books that I sell are going to be sold when gold and silver are already in their blow-off top. And what I'm trying to do is I'm trying to educate people on economics and a little bit of the history of money and currency, the difference between money and currency, the difference between price and value. And it's really important for people to learn as much as they can about the monetary system and the financial system before this next crisis happens, because everything that they've done, all this currency creation, it warps the economy. It's taking wealth from one sector and giving it to another. The economy gets warped, and the bigger the warping, when it snaps back to equilibrium, the bigger the pain, the more pain we're all going to have because of it. And like I said, there is no avoiding it. But yes, it's Ben Bernanke's fault. What we have coming is the Bernanke bust.
Let me say I do agree. I feel like, yes, gold and silver predominantly in the headline, but the book is so much more than metals. It really is. I feel that there's a lot of optimism in the book, right? Like, you're not just trying to scare people. You're actually trying to prepare people and say, like, look, don't panic. Like, you can prepare. You can prepare for the crisis.
Yes.
And it's just a really good overview of the monetary system. I want to get in some thoughts on central bank digital currencies. You talk a lot about it in the book, the coming of CBDCs. How far away are we from that reality, and your thoughts on central bank digital currencies?
I don't know, 1-2 years, something like that. I actually hope they're a little bit late so that the crisis comes before then, because this would be the method for them to get everybody into it, and then you're trapped. Once we're all using central bank digital currencies, right now, they inflate the currency supply and they transfer wealth. But if they scare people too much, you can go into other assets. Well, once they've got central bank digital currency, if they don't want you to buy gold, they just won't allow you. The currency won't buy it. The currency is programmable. They can control almost every aspect of your life once we get on any programmable currency, where they can, if they don't like you, they can make it so that you can't spend any currency within a 5-mile radius, outside of a 5-mile radius of your home. If they don't want you to travel, you won't be able to buy airline tickets or take an Uber or pay for a hotel room. And once they get you into this, now I should have prepared and had this little bill, but in Taiwan, they came out with a note that was a temporary note to stimulate the economy. They printed a whole bunch of currency that had an expiration date on it. And so as it starts reaching its expiration date, nobody wants to hold it. Velocity picks up, but the value of its purchasing power diminishes. And they can do, if they think they need to stimulate the economy, what they can do is punish you by charging you 10% on your savings. And if you notice your savings vanishing at this amazing rate, you're going to spend it before it vanishes. So they can cause, this is the one area that the Federal Reserve and the currency creators, they don't have direct control over it. That's the emotion of the public is what controls velocity, whether or not you feel good enough to go out and spend. So if they want you to go out and spend, they'll just punish you if you don't.
Let's bring this up, okay? I'm just curious to know if you have thoughts, if there's any correlation between that and everything we're seeing in news from, UFOs being shot down, spy balloons? Is this all part of one big distraction, and for what? What's any feeling of what the game plan is here? What are they trying to do?
Well, I don't know. The world has changed so much in the last 3 years that I just find it absolutely unbelievable. And I didn't believe evil at this scale existed, and it does. There's a lot of distraction going on. What I would urge people to do, I don't pay attention to all of it all the time. And what I do is I try to focus on understanding the system behind it. And when you are looking at the system and then where the economy is, so the economics and where the economy currently is, if you can hold all, that's one of the things about this book is I was trying to cram in a very small, easy to read, I mean, it's not a real thick, intimidating, daunting book, and I try and do it in very simple language so that somebody can, if you understand how currency is created, the difference between price versus value, some simple economics and the current state of the global economy, and then you understand the differences between the 70s bull market and today, the vast amounts of currency floating around, the paper wealth that is floating around the planet. It is a blizzard of paper, and it'll all try and land on that same tiny pile of gold one day, and that will cause an absolute explosion. It's a wealth transfer that happens from the people that are coming late to the party to the people that got there early. But if you can hold all of these things in your mind at once, you sort of get a painting of what the future might be.
Do you think that we'll see gold-backed currencies?
I hope so, because I would rather have them use gold than a gold-backed currency. When you go on a gold standard, it just opens the door again for this whole scam to start all over again. If you
Right.
are paying for things in grams of gold or nanograms or whatever it takes, anybody that says there's not enough gold doesn't know fundamental economics. They actually, if they say there's not enough gold, they don't know how to do division. I mean, if you look at the number, you could give every atom of gold in a single ounce of gold, a serial number that could be put in a vault, and as long as it's this one stable thing, and you have a number that is not something that a government can expand or contract at any moment, and it's not something that's borrowed into existence and then vanishes as it's being paid back, that could be used, and there would be more units of currency than currently exist on the planet with just the 1 ounce. However, if you were doing that with just 1 ounce, the amount of work and time and effort put into mining that 1 ounce wouldn't equal the amount that 1 ounce would buy. Gold and silver are honest money. They're not just, we're not just talking about sound money. We're talking about honest money, because there's no fraud and theft involved. With fiat currencies, there is fraud and theft. Every transaction, with gold, the amount of time and effort to dig it up, mine it, refine it, mint it into a coin, and then buy something with it, it's an equal trade. You're trading something for something. With fiat currency, when you borrow currency into existence by saying, here's this house I found, I want to borrow $1 million, and the bank imagines $1 million worth of IOUs into your account, you pay the seller with those IOUs, it's a trade of nothing for something, and that's fraud and it's theft.
I want to wrap with this, with the few minutes we have left, Mike. I started by saying your first book came out in 2008. Now you're out with this book, 2023, obviously a labor of love. And you've obviously accumulated a lot of knowledge along the way. Just, is there one thing that's stuck out for you that you learned in your journey here that you can share with us?
Wow. Well, the main thing that stuck out more than first, Ben Bernanke did not let the markets clear in 2008. If they had let things just find a bottom without papering over it, we wouldn't be in the trouble that we're in right now. And people have no idea how big the trouble is. When when you get the book, actually, parts 3 and 4, chapters 3 and 4 are available for free online right now. You can download them at ggsr21.com. I urge everybody to read chapter 3 first. It's easy, and it's the way the rest of the book is written. Chapter 4 is one of the most important to understand, and I needed it online so that I could refine it and update it. But if you can understand how currency is created, how you have been monetized, that every dollar in existence is an IOU, YOU. I owe you your future work hours that you're going to use to pay taxes on the principal and interest on the bonds that the Federal Reserve bought by conjuring currency into existence. If you can understand all of that. So Ben Bernanke papered over this thing, and then what happened in 2020, 2021, 2022, just this bizarre world that we live in today, where democracy is the whole. Our lives are threatened by a bunch of people that think they know more about how we should live our own lives than we do. And the censorship that we've seen, the shifts in power, and how they badgered all of us, bullied all of us into shutting down the economy. Those are the things that really stuck out. It's 2008, not letting the markets clear. If the crash had continued and we got to where the stock market was undervalued, real estate was undervalued. The stock market wasn't. It went down to fair value, but then they papered over everything by creating, they've added 50% to the currency supply. The chapter on the $7 trillion theft is something that people need to read to understand the wealth transfer. And if you can hold that in your mind while you're reading the chapter on the chapter on reverse Robin Hoods, how the wealth that they've stolen has gone to a certain sector. And you can see, I show the different wealth percentiles. I show how much they have in deposits in their checking accounts, and it is mind-boggling how much wealth transfer has happened since 2008, and it's all the fault. If we didn't have the central banks, it would be an entirely different world today. The big buildings in all of the downtown areas would have different names on them. It wouldn't be bank names. The financial sector wouldn't be such a large percentage of the economy, and banking would be doing its fundamental job where it is an actual service of the economy, where it facilitates transactions and helps everybody to grow our prosperity. It would be honest banking if we had honest money instead of dishonest currency.
Mike Maloney, on that note, I will wrap it here. And I kept thinking, these are conversations that should be happening in schools, right?
Yes,
but
absolutely. For our children to start learning about how economic. It would be great by the time somebody leaves high school if they understood how the economy works a little bit, so that they can see, because the average person really does get sort of scammed and conned by the system. It's the way the system is laid out. It's not that any particular banker is evil. It's that the whole monetary system is this evil machine, and they're just a cog in this machine. They don't realize that they're part of this evil
People
thing.
realize it too late. I met a super fan a few weeks ago, in his early 50s, and he was saying how, shows like mine and others, he was talking about mine, so I'll promote that one, but he was saying how it really changed his life and how he views money, because he wasn't taught it by his parents. He wasn't taught it in school. He knew nothing. He didn't know what to do with his wealth. So thank you, Mike, for helping to educate the folks out there with this great book. I urge everyone to get it, The Great Gold and Silver Rush of the 21st Century. Hey, it was over 2 years in the making, but well worth it. So thank you, Mike, for coming on the show.
So just go to ggsr21.com, and everything is there for free.
All right. Well, I wish you the
Thanks.
best of luck and success with the book, Mike. Come back soon, okay? Let's not wait
Okay.
3 years. And thank you all for watching. We'll have more great content coming your way. Be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com to stay on top of it all. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.